Over the past 2 years, we have had the emergence of AI, which has been by far the hottest industry, where stocks like Palantir and Nvidia have made huge gains. Now the question is, what industry is next? But there is another rapidly accelerating sector within the vast AI market that deserves attention, an industry that is only beginning to get some attention now. So in today's video, I am going to be talking about Knightscope Inc. This is an intriguing NASDAQ listed microcap stock that you'll want to know about. Everybody is chasing the next big AI stocks, but this stock has been steadily making moves recently and is still an under the radar stock that could emerge as a rising player in this market. Now we've got a lot to get through in this video, so I will try to keep this intro short, but if you find any value in this, can I ask you to smash the like button? And it helps the channel out so much. I'm aiming to get 500 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I want to point out that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now let's get into it. Back in 2021, the security robots market hit $27 billion. Although the industry gathered some attention at this time, it has been largely under the radar. Forget about chatbots and apps. Keep your eyes on Knightscope Inc., trading under the ticker symbol KSCP on NASDAQ. This pioneering company is making huge strides with its AI-powered autonomous security robots and cutting-edge emergency communication systems. This company could potentially be one of the most undervalued stocks on the NASDAQ. So first of all, who are Knightscope? Knightscope is an advanced security technology company based in Silicon Valley that builds fully autonomous security robots that deter, detect, and report. The company was formed in 2013 in response to some tragic events in the US, and now the company's mission is to make the United States of America the safest country in the world. Knightscope is an AI security robot pioneer, with several models on the market being deployed at schools, casinos, hotels, hospitals, and other public venues across the US, which I will talk about in a moment. The company has a full range of robotics products, and Knightscope boasts an impressive client roster that includes tons of high-profile US corporations and law enforcement agencies. Looking at the charts over the past 6 months, we can see that we have very favorable conditions right now. The stock is sitting right at the level of support that has been tested a few times over the past 6 months, but found very strong support. On the 2 occasions that it dropped below this, it was back above it within a few days. And it's beginning to look very bullish on the technical indicators too, while the RSI has now dropped very low. In fact, the last time the RSI dropped to this level, the stock ran over 20%, and the time prior to that, back in July, it ran from under $5 up all the way to 10. But what do analysts think of Knightscope right now? There are 3 Wall Street analysts covering KSCP stock. The consensus price target is $15.33, while even the lowest target of $8 is still far above the current price. And we can see these price targets here. While there was previously a $30 target set in the summer by Ascendient Capital Markets, the most recent target was set in the past few weeks when H.C. Wainwright reiterated their buy rating and issued a $12 price target. Knightscope's mission is very clear. With the long-term mission to make America the safest country in the world, they are targeting a $230 billion addressable market and have the first mover advantage with over 3 million hours of autonomous operations across the country. Now, existing public safety infrastructure is expensive and it is inefficient. Security guards cost between $25 and $65 per hour. Police officers cost communities between $50 and $150 per hour, and they all are required 24 hours a day. The annual negative economic impact of crime in the US is estimated at $2.6 trillion. But Knightscope has a solution. The autonomous security robots are priced between $1 and $11 per hour, and the technology can operate 24 hours a day. They have a huge addressable market. As we can see here, this is estimated at $230 billion. Across everything from healthcare to critical infrastructure to public safety. Now, this sector has great growth potential because with the way things are going, robots could be everywhere in the near future. But this is important, and these are the key growth drivers for Knightscope. They've partnered with Verizon, Frontline Advanced Telecommunications Network, for first responders to drive growth, scaling ASR and ECD business in healthcare, gaming, industrial, real estate, education, transportation, and government. US federal government growth deployed the first K-5 Gov at US Department of Veteran Affairs, won a US Air Force Phase 1 contract, alpha prototype of K7 autonomous security robot is completed, with the beta prototypes in 2025 targeting production in 2026. Accelerated product development schedule for the K1 Super Tower, again targeting production next year in 2026, with plans to significantly grow top-line revenue profitability. Now, this might all seem like very ambitious plans for any company, but Knightscope is led by a top board of directors with experience from some of the world's top companies, such as Ford, Toyota, and General Electric. Led by CEO William Santana Lee, who has over 30 years of experience and was the youngest senior executive at Ford Motor Company worldwide. In the latest news from Knightscope this month, they signed another $1 million in contract renewals, expansions, and newly won sales. This momentum highlights the increasing priority that organizations are placing on modern technology-driven approaches to building safer and more secure environments. And this follows on from a new $1.3 million in new wins signed back in July, but this is just the latest in a long line of contract wins for the company. Knightscope's rise is now unmistakable. Since April, the company has signed over $7 million in new contracts and renewals, proving that demand for its autonomous security robots and emergency communication devices is accelerating nationwide and quickly too. But this could just be the beginning, as they are locking in these new contracts that are not one-time deals. These contracts offer exactly what we want to see as investors, and that is recurring revenue. With the company expanding into universities, airports, and government agencies, while they also secured a new 33,000 square foot Silicon Valley headquarters to support manufacturing, engineering, and the deployment of their business strategy as they power the next phase of growth for a new era. And Knightscope also recently announced that it signed a 2-year partnership with Palantir Technologies, joining Palantir's FedStart program to accelerate the company's entry into the US federal marketplace. As stated by CEO William Santana, this agreement represents a transformational step forward in our federal strategy. By joining Palantir's FedStart program, we are preparing to deliver our autonomous security technology into some of the most mission-critical and security-conscious environments in the nation. This collaboration aligns strongly with the current momentum in Washington towards establishing a national robotics strategy to ensure US leadership in autonomous systems. As federal leaders look to autonomous technologies to enhance operations and resilience, Knightscope is investing in the infrastructure, the partnerships, and accreditations that will enable us to lead. Knightscope have been making big progress all year. In February, they announced that they had received full authority to operate through the Federal Risk and Authorization Management Program. This enables broader deployment of the company's autonomous security solutions across federal agencies. As it says here, achieving full FedRAMP authorization represents a significant milestone in our mission to make the United States the safest country in the world, and this authorization opens doors across the federal government, allowing us to bring our security capabilities to agencies. So as government contracts ramp up and private sector demand grows, Knightscope's recurring revenue model could start compounding rapidly, turning what is now currently a tiny market cap robotics firm into an important player in physical AI. Last month, Knightscope released their second quarter financial results, and there was some pretty big highlights here. So looking at their 10Q, we can see the total revenues have increased year over year. The gross loss has decreased significantly from 2 million to 1.5 million, while their loss from operations has dropped to 13 million, and the EPS loss has also dropped. Looking at the balance sheet, we can see that they have total assets of 29 million and total liabilities of 14 million, meaning that the company has stockholder equity of over $15 million. Now remember that this is a company valued at just 55 million, so having such a strong balance sheet is great. But it gets better than that, because this 10Q was for the period ended June 30th, and they had 8 million in cash. But when we look at their highlights, we can see here that they now have cash on hand of over 24 million, 3 times what they had at the end of June. This gives the company more than enough cash runway to expand the business as they wish to do. And Knightscope have also been featured in several publications, listing it among the best small cap robotic stocks right now. This article on TipRanks a few months ago listing Knightscope as one of 2 under the radar robotic stocks, while this article includes Knightscope as one of the 10 best small cap robotic stocks right now. But guys, what do you think? Right now in 2025, we are witnessing the birth of a new sector where AI, robotics, and national security all come together, and Knightscope is helping to lead it. With their federal clearance through FedRAMP, and now a presence in Washington, D.C., this company is no longer just a speculative concept. But let me know your thoughts in the comments below, and always do your own due diligence. Remember that I'm not a financial advisor, but if you enjoyed this analysis, then please like and comment, and I'll catch you in the next video.